Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is March 8th, 2024, and I'm here to bring you a little market wrap-up for the week ending today on Friday, and also to show you some trading levels that will be for the forthcoming week of March 11th, 2024. Before I get going here, the usual disclaimer about things. Everything that I'm about to show you here is for informational and educational purposes only. Precision Trading Labs, we are not money managers nor financial advisors, but we work with our subscribers in order to help them become competent traders. So there you go. Let's take a look at the levels here. So we're going to take a look at the some of the major market indexes, and then we'll also look at some popular individual stock symbols. That's the game plan here. So if we're looking at the SPY here, which of course is the ETF of the S&P 500, we're looking at a 2-hour chart here. And so this week we hit another all-time high a couple of days ago. We got to about 518 and change on the SPY. It's backed off a little. It's down about 512 now, so a little less than 2% off of the 52-week high, as well as the all-time high. So anyway, that's where we are now. And if we take a look at this chart here, we can see that right here, this was the origin of a pretty, of a robust move here. There was a nice little pop out of there, and if you notice, price came down, consolidated right there, and we're looking at a at a 2-hour chart here. And if in fact, if we, let's say, back it off and we bring it down to a 30-minute chart, you can very clearly see this drop, and then notice that consolidation there. And then, of course, there is that gap, and then it goes from there. And so right here, in this region here, you basically, willing buyers and willing sellers were more or less in agreement within this relatively narrow range of about 2 points on the S&P, on the SPY. And then right here, what occurred here was an exhaustion of sellers. All of a sudden, there were no sellers that were willing to actually sell in here anymore. And so as a result, for these trades to have occurred, buyers effectively had to run up the price chart until they encountered willing sellers. So that's kind of the narrative there. And so if we can think of here where buyers and sellers were in agreement, we can think of essentially willing buyers as representing demand for shares, and of course, willing sellers represent the supply of shares at that particular price. And so essentially right here, when you have that exhaustion of sellers, where the sellers essentially just disappear, we can think of that as supply disappearing. And so as a result, all you have left in its wake is demand. And consequently, we think of this in here as a demand zone. Okay. And it's an area where when price returns, some people think that there are literally unfilled buy orders here. Now, it could be that's very much that could be the case there, but on the other hand, as time goes on, it's not like there are literally unfilled buy orders there. But this was an area where institutional buyers as well as retail buyers wanted to buy, but if essentially price was only in here for a relatively short amount of time, and then essentially the supply of shares left. And so when price returns to this level, there is the expectation that a fair amount of the time we're going to get another bounce out of here, because there is still latent residual demand in here that was never fulfilled because price left there quickly, both in terms of the amount of time that it spent here, as well as the fact that it didn't just dribble out of here, but it came out with a great deal of energy. Okay, so that's the narrative of kind of what we're looking at here. And so again, what we do is we refer to that as a demand zone. Okay, and it's an area of expected upward price pressure created by a period of brief consolidation in a tight range, and then that's followed by a clear abrupt exhaustion of sellers, which I just showed you, and then there's an energetic bullish move. Okay, and so that is the foundation for a bullish trade. Okay, in other words, when price returns, we're looking for a bounce a rally out of that zone. Okay, and so right here we refer to this again as a demand zone, and that there is your definition of that. And so essentially, there are effectively two flavors of demand zones here. One is when price, but in both cases, okay, price rockets out of it, but in some certain cases, price comes from above, leading into it. In certain cases, price comes from below, leading into it. And so those are the kind of the two flavors of a demand zone. And so what we're waiting for then is a retracement back to this demand zone in order to then get a bullish trade out of that. And so that's the narrative, and that's the theory behind how we trade here at Precision Trading Labs. Okay. So that's the deal there. So if we look at this, if we go back to the 2-hour chart here now, here's what we were looking at when I first brought this up here. So that's that zone that we were just looking at here. And so we can see, of course, we're very short distance away. And so at that point then, this would be a place where we could look to express a bullish trade. And of course, there are numerous, one could express the trade obviously by either buying a call or obviously buying the stock itself. One could also do a vertical debit spread here. And of course, if you like to sell premium, you could also do a bull put vertical spread, at which point then you are collecting premium essentially by selling a put. And then, of course, what you're doing is you're selling one put, and then you're buying another put underneath in order to better define and to rein in your risk on the trade, as opposed to just selling a naked put. So those are all different ways one could express a trade at this demand zone. Okay, so that's the story there. And so there's a demand zone there, and then after that, there's really nothing. We would be looking for a bounce here, but after that, there's really nothing below until much further down, and then at that point, then we'd be looking around there. That would be the next region. And the reason we're not looking for anything in here is that more or less this has all been chewed up already. Okay, we can think of that as maybe maybe it's support, but we're generally not trading off of that because there's the expectation that there is not necessarily a whole lot of residual demand left in there, and so then we're essentially then waiting for this to return down to here, and then we would get into a trade down here. And if we go back and look at what the zone looks like there, there's the zone that I drew. It's a 30-minute level, and then right there's that drop, there's that base, and then it rallies out of there. So again, there's that brief period of consolidation followed by the very energetic move, and then and essentially a very long move. Okay, so that's the story with the SPY. Above, there's really nothing because we're sitting at very close to we're very close to the all-time high, and so there's really nothing above here for us to push against yet. Obviously, if we get a pullback here, and then there's a couple of right turns that get made in here, that might create a supply zone, and you'll see something like that in an upcoming chart. But right now there is no supply here on the SPY. All right. So if we take a look now at the Qs, which of course is the ETF of the Nasdaq 100. Here's what we're looking at right here. So here's where we closed. Again, up here, here's our all-time high there. Again, there's no supply above, so we're just looking below to see if there might be some demand that we could trade off of in order to get a bullish trade if we get a minor pullback. And so taking a look at that, right here on the 2-hour chart, right here there's a drop. Okay, we have that consolidation in here. There's a little blip here of that green candle, but essentially right there's the consolidation here, and again there's that pop there. And in fact, this gap actually exists in a number of charts here. I'm referring to this as the NVIDIA gap because on that day, NVIDIA came out and knocked it out of the park with their earnings announcement, and so you see this gap in a whole lot of charts, particularly in on both the major market indexes as well as a lot of the tech stocks. So that's the NVIDIA gap there. So if we get a pullback to there, we'll certainly look at this as a potential trade. Having said that, because this is such an obvious level, um, we're going to be a little wary of it because everybody knows about the Nvidia gap here, and it's the origin, and people like to trade ahead of gap, right in front of a gap. It's painfully obvious. Consequently, I would not necessarily be racing to trade this, but on the other hand, if it drills into the level and starts to reverse, we might end up doing something with it. But then after that, it wouldn't surprise me at all if it comes down to actually see this level break and actually price to actually go to this one, which is actually sitting right behind. And we've referred to this as a level on a level. Because essentially we're right here again, there's that same narrative, a drop, a base, and then that energetic rally out of there. And so it wouldn't surprise me at all to see this level break. And then at that point, then we would end up using that one. So we'll be keeping an eye on that. So that's the story with the Qs. So that level right here, that's about 3% down. And then of course, if we go a little further down, that's about 4%, about a little less than 4.5% from where we closed there. So that's the story with the Qs. Take a look at the Russell 2000. So right here, here's where we closed over here. We actually had a nice trade off of the Russell earlier this week here. In fact, I could show you now. We actually have a supply zone here because, and this actually goes back a ways here, and so that goes back actually to April of or March of 2022. So this level is actually almost about 2 years old. Okay, and so price rallied up here, consolidated, and then started on its way down. In a sense, it wasn't the greatest supply zone because normally we would like to see more or less an energetic move and one that's relatively uninterrupted. This one obviously came down and then it kind of paused for a couple of days and then it kind of shot down again. Nonetheless, we did use it and we ended up with a nice trade out of that, or at least at the start of a nice trade. Okay, so price rallied up there. Um, some of our subscribers, we ended up buying puts on the Russell, so it's kind of started on its way down. You can see it's almost a 2-to-1 trade, a little less than a 2-to-1 trade at this point. This is our area of risk in here. Here's our entry. Here's where our stop would be. So that's 1 unit of risk there. That's 2 units of risk, 3 units of risk, etc. So it's gone about 2-to-1 at this point. So we'll see where that happens on Monday. Down here on the 2-hour chart, or actually really on the daily, there's a level that's about little more than 3% down. And so anyway, that's what we're looking at on the Russell. Let's see, taking a quick look at TLT. I'm trying to think if there was something there. Yeah. So right here, these are the bonds. This is the ETF of the longer term bonds that are 20 years and of duration and greater. Okay. And so we have a level right down here, about 1.5% down from where we closed at around 95. So this is sitting right around 94. So we'll be looking at this for a potential look for a potential bounce at that point. Then above, I don't think there really is anything here. This is all this was kind of chewed up supply up here. In fact, this goes back, I think, a lot further, where there was actually this is tested supply. Right there was the actual supply zone there, where notice price consolidated, and then again, this is an exhaustion of buyers in this case, and then price dropped all the way out of there, and then we can see subsequently price returned to this and kind of stuck in there. It kind of, sort of fought its way through and then eventually dropped out of. But this is well chewed up supply now. So I would not be looking to trade off of that. Right here, this has actually some potential. I didn't mark it here, but right here, this level actually has some potential, and so we'll be kind of keeping an eye on it. Again, there's that rally, a base, and a drop there. Price came up into this preceding it, but these are all areas where price essentially bounced up. So I'm relatively confident that this is not really sort of say, this is not really a test of prior supply. This is fresh supply here. So I'm okay with that. So this would be an area where I guess where we would look for price to return to this level, and at that point we could express a bearish trade out of that supply zone there, and we can see that's about 2% above where we are. So essentially, we have we have a level, two levels that are relatively close, above and below. So in all likelihood, we'll probably get some kind of decent trade out of the TLT in the coming week. All right, so let's take a quick look at some popular individual symbols. Apple's had a rough time of it. While we've hit all-time highs on the market, on the broad market, and particularly on the Nasdaq, Apple, which more often than not is a huge component, usually as Apple goes, where as Apple goes, so does the Nasdaq. Not lately. And so as a result, it's actually been kind of getting beaten up here. We actually had a little scalp trade over the last swing trade over the last couple of days here, which we got out of today. But right here we had this drop base rally here. And so we ended up yesterday getting into this trade right here, and it was just kind of a more or less a scalp trade. We didn't want to leave it over the weekend here. We just figured we would take the money and run on that. But anyway, that was that move there, and you can see it didn't really rocket out of there at any point. We can see that this is about a 1.5 to 1 trade. That was more or less kind of where that was the distance that we got out of that. All right, so that was Apple, and then again above here, particular on the daily zone here, excuse me, on the daily chart. Okay, right here we have that drop base and a drop there. And so if this thing does rally up here though, that's an area and that we would look to express a bearish trade out of there in terms of shorting. And again, one could either buy a put, short the stock, or one could also do a bear put debit spread, and of course one could also do a bear call credit spread, and that would be another way to a way to collect premium up here. And that's about 6% above here though, so you'd need a decent pop to get up to there, because you'd have to go basically from about 170 to about 180 to get to there. So that's Apple. Take a quick look at Google here. So right here on the daily chart, we have a rally, a base, and a drop there. Again, here's our exhaustion of buyers in this case. Okay, there was that brief consolidation, and then the thump down, a little pause, and then it kind of continues on down from there. But in order to get there, that's also going to be about 6% up. So we'll need a rally to get to that point. So that's the level that we're looking at on Google there. Beneath here, that's just kind of support that's here. We're generally not looking to trade off of just pure support. And at that point, then, in fact, this is also support. So there might be something in a smaller time frame, but in terms of these swing time frames, there's really nothing that we're excited about in terms of Google here. But on the short side, again, there is that level above here that we're actually kind of enthusiastic about. So we're definitely going to set an alert. So if this thing gets up, let's say above 140, 142, we'll get an alert, and then we'll be able to reevaluate at that point. Take a quick look at Amazon, and spread this out a little here. And we'll turn this into a 2-hour chart. Okay, so here was a level that we actually had last week, and so we can see, okay, this is what we were looking at on the 1st, which is a week ago. Today's the 8th, so this was exactly what I was looking at last Friday when I made this video. And so this week we ended up getting a nice trade out of that. There was a drop. Okay, price dropped into this level, kind of dawdled around in there for a couple of days, but then we ended up getting that nice pop And we actually got out of this, I think earlier today. That's when we closed this out, and that's basically because it got to a level of supply overhead, and what more often than not, a level of supply is going to stop a trade that ended up coming out of demand. And so we can see within this narrow range, it's kind of oscillated between these narrow. These supply and demand levels that were relatively close together. We could see it kind of came up there, and now shot down again. So that we ended up getting a decent trade out of that, trading some Amazon options there. So anyway, this is where we close now. So the next clean demand zone is right down here, because we would not go back to this again. As far as we're concerned, this is chewed up and it's had its day. So that's about 3.5% down. So that would be the kind of the next buy zone for Amazon. And then above, we could be looking at, and actually no, this is actually supply. This is tested supply, which actually goes back a long way. I'm not going to go back, but there's nothing here. We would have to end up looking above here in order to look for another short. So we'll just leave that alone there. In fact, I think that's actually might be the all-time high there. I can't remember. But this was actually a level that got created from all the buying post-COVID, and so we hadn't actually been back. This is a level above here, which is now resistance, and we haven't actually been back there probably in over a year now. So, but it's already been tested, so I'm not in love with it. We take a quick look at Netflix. Here we are on Netflix. Again, this is an area above. This is tested supply. Okay, so that it's not a fresh level anymore. So I would not be looking to trade it. But if we just go back, okay, right somewhere over here, I believe, way back here, okay, that pink band that you saw, that actually originated more or less from there, and that was that started that area of supply, which then dropped from there. And so if we now flash forward, we can see right there. So this is a tested. This area is a test of all of what I just showed you, way to the left there. And so this is not a fresh level of supply there. So the fresh level of supply, of course, is going to be above that. And so if we go back further, okay, right there, that's the fresh level of supply. Okay, and so that's at 627, and so right now we're sitting at 604. So we need to get up about 23 bucks or so, which of course on a $600 stock is not really heavy lifting there. So we'll see what happens there. So that's the area of interest above for supply, and then down here, if we drop this down to the daily chart here, there is a demand zone, a short distance down here. I'm not totally in love with this because of the fact that it's kind of sitting right in the middle of this move up here, and it's kind of nestled among all this other trading. So I'm actually not wildly enthusiastic about this level now that I'm looking at it further. But we will certainly keep an eye on it. Price has not been back there since. We did get a little pop out of it. So we'll look at this. This might just represent more of a scalp trade than anything else. All right. So that's Netflix, and we'll wrap it up with looking at. We'll take a quick look at Tesla, and then we can also look at Microsoft and Nvidia. So here's Tesla, buddy Elon here. So here's what we're looking at. Here is the close of where we are today. Okay, and then above here, right here is an area. And this is the origin of that gap after that consolidation. I'm going to look at this, but it's actually very obvious. Plus the fact it's a long distance away anyway. Now that I'm looking at it, it's 20% above here, so it's not like it's going to get there anytime soon, presumably. So there's really nothing I'd be looking to short on Tesla. Down below here, we go back where this blue region that I outlined prior. Okay, right here, this is that little area right there. There's a drop, a base, and then it kind of rockets out of there. Okay, so that's the area of the trading level for Tesla that I would be looking at, and that's only about 3% down from where we closed. So obviously that's not a big distance away. And then we'll wrap up here. We'll take a quick look at Microsoft in the 2-hour chart here. So here's the 2-hour. So we have a rally, a base, and a drop there. Again, there's that consolidation, the exhaustion of buyers. Okay, the sellers ran down the price chart until they encountered willing buyers, and so right there, that's a supply zone that's about 2% above here, and we could express a short trade out of that, a bearish trade out of that zone. So that's sitting at around 2% above where we are now, at around 414 and change, and then below here. So right here is support. This is not demand, but it is obviously it's support, though. We can see prices dipped into this and has gone back and forth about two times after this initial dip there. But I would not be looking to trade off of that. And so the next area of clean demand is kind of right in here. And in fact, this really actually, I would have to look at this in a little greater depth and probably drop the time frame down a little to see if this actually qualifies. But this is an area of interest I will certainly take a look at. And so that's sitting below here, and that's about a little more than 3% down from where we closed. And then we'll wrap it up here by taking a quick look at NVIDIA. So here's NVIDIA. NVIDIA actually got thumped this week. And so in fact, in the last, I guess, really was actually today, we can see that right here, we had actually right there that those crosses that actually represents the 52-week high, and of course, in the case of NVIDIA, I believe that's obviously the all-time high as well. And so we actually got way above there, and then it just got thumped. Then as the day went on, so we can see it's trading after hours now, but it's now sitting at what 850. Oh, in fact, it's actually sitting now, and in fact, it's sitting. In fact, if I put on the, if I change the session here, let me just take a quick look here. If I change the session and I actually put the after hours here, and there's your post market here, and if we do that, we can see here's where we closed in the regular hours, but you can see that darker red here. That's the after hours. Okay, so in fact, this thing is now sitting at around 860, and this is actually an area that I identified as a 2-hour demand zone. And so, in fact, if I go back now to the regular session here, because I only base my levels on using the regular hours, even though of course we can look to see what's going on in the after hours. But generally, the regular session hours are the ones that are of course more reliable, at least for us. So if we go back and change the session back to the regular hours, okay. So again, we saw that NVIDIA is now sitting roughly about there. So right here, here's a drop, a base, and a rally there. So this is an area where we would be looking for a potential bounce. And so really, this is sitting. If this is where it is in the aftermarket, this might be barely 1% down from where it is now. If in fact it opens roughly there next week. So we'll see about that. So anyway, so we'll definitely be keeping an eye on NVIDIA there. And then, of course, based on that, then after that, then the next clean demand zone is down there, and that's about 8% down. So there you go. So that is that's what I got here on all those symbols. Hope you found it interesting. Hope you found it informative. One of the things I'd like to ask is if you did enjoy this, please give us a like on our YouTube channel. Obviously, subscribe to it, and also I would be delighted if you would like to hear more about the supply and demand concept. If you can go, and there's a Calendly link in the YouTube text there. I'd be delighted if you'd schedule a call, and I'd be happy to tell you more about what we do at Precision Trading Labs, and to talk to you a little bit more about the supply and demand concept, which is the basis of virtually all of our trades here. So at any rate, that's what I got. Thank you very much for the privilege of your time. This is Mitch Firestone with Precision Trading Labs, and I will see you next time. Take care. Bye-bye.